The first topic that I'd like to discuss today, related to investment trends for 2026, is AI. So, artificial intelligence has been potentially the biggest trend over the past year that every investor is paying attention to. AI started with a technological breakthrough, but it has evolved into unprecedented capital expenditures, things like data centers, equipment, and more. It seems like investing in AI, technology, and capital expenditures are everywhere. So, for this trend, we could get a little bit of perspective by thinking about history. Two examples of transformative technology in the past were the dot-com bubble of the 90s, which maybe some of us remember, and the railroad era of the 1860s. A little too far back for any of us to have been there. The common pattern that we see in these huge transformative changes is first skepticism, next rapid adoption, next market exuberance, followed by an adjustment of expectations. So we have to distinguish between mere growth versus endurance. Spending billions on technology is the first part, but the second part is actually converting that investment into sustainable profits, which is something that we are still waiting to see. When will this happen? Railroad infrastructure, if we think back to the railroads, railroad infrastructure was built, and that was a huge technological advancement, but many shareholders lost their investment as most railroad companies ended up failing. So the long-term potential for AI is real. However, the speed of when profits materialize can be something that the market overestimates. The incredible tools and huge spending now need to be converted into profits. So if we look ahead to 2026, the outsized growth that has occurred has mostly been concentrated in a few specific areas. And I'm going to show a chart that represents this. So this chart shows the 2025 returns across different sectors, including their highs and their lows. The leading and best performing sectors, no surprise, were communication services, technology, and industrials. The S&P 500 did well as well, overall. However, most other sectors still experienced strong annual returns, except real estate was the only sector that was negative in this chart. So even with these already positive returns across sectors, there still may be more opportunity when it comes to AI. And the reason for that is because business adoption of AI is really still in the early stages if we're thinking about all businesses. The Census Bureau issued a business trends and outlook survey that shows that the share of businesses reporting AI use more than doubled from 4% in September of 2023 to 10% in September of 2025. Those anticipating using AI in the next 6 months rose from 6% to 14%. So those are still good numbers, and they're really increasing pretty quickly. However, this is still relatively low in terms of adoptions across all businesses for using AI. So, in conclusion, when it comes to AI for long term investors, AI presents both a growth opportunity and a portfolio risk to manage. Most investors already have exposure to AI stocks through major indices. Just as an example, the Magnificent Seven technology companies comprise about 1/3 of the S&P 500 market capitalization. So just simply by holding the S&P 500, you have a concentration in those Magnificent Seven companies that really are oriented, a lot of them this past year, around AI. So be aware of this concentration and stay oriented around an asset allocation that fits your long-term goals.